looking increasingly like 2008, but we're probably going to know by Wednesday, I would say, when the Fed meets.
And let's speak to our business reporter, Jonathan Josephs. Jonathan, so why Credit Suisse? We've seen troubles with some US banks already, but why Credit Suisse? And can these jitters in the banking world be contained?
As we just heard there, Anita, it's going to be a question of time to see if these jitters in the banking sector can be contained. Nobody quite knows the answer to that just yet, but we are seeing a big sell-off of financial stocks on European markets this morning. We're seeing big falls in the share prices of the likes of Barclays, Prudential, Standard Chartered, NatWest and HSBC here in London, but also in German banks such as Deutsche Bank and Commerzbank. There's also similar moves in Paris with the likes of BNP Paribas. In terms of why Credit Suisse has had all these problems, well, Credit Suisse has had problems going on for a number of years. I've got a list here. It had a chairman who resigned for breaking COVID rules. It was involved in a bribery scandal in Mozambique. It had multi-billion-dollar losses at investment funds, including a US hedge fund. It was found guilty over allegations of laundering money linked to Bulgarian drug traffickers. It's been involved in corporate espionage claims, which it had to settle, and tax evasion claims in the US. So quite a list there. All these problems have ended up costing it money and sapping investors' confidence in what was Switzerland's second biggest bank.
What does this mean for the regular person? What impact might this have?
Well, in the immediate here and now, that remains to be seen. It's going to, again, be a question of how things play out over the coming days and weeks. If people are watching this in Switzerland, they may at some point see some branch closures because UBS and Credit Suisse have both got big retail banking operations in Switzerland. But when we look at those falls on the stock markets that have been linked to this, well, people might have money invested in a pension fund, for instance, and that will have taken a hit because of this. We might also see moves in interest rates because of this being affected, because all of this is a reflection of risk, and the banking sector more broadly is weighing up where the risks are and how exposed it is to various problems in the financial system. Interest rates have risen pretty sharply since the 2008 financial crisis. They were quite low because of that. And in the last year or so, they've risen because of inflation, which is linked to the coronavirus pandemic and the war in Ukraine. But interest rates have risen pretty quickly. And when you make such big moves like that, it's not surprising that there are some cracks appearing in the financial system, as we've seen with these US banks and as we've seen with Credit Suisse. Now, that might end up with the US Federal Reserve and the Bank of England, which are both making interest rate decisions this week, having to take this into account. Because if banks are worried about losing money and have seen some of these losses because, for instance, bondholders at Credit Suisse have been wiped out for some bonds as a result of this rescue package, then that means that the banks will be more averse to risk in terms of who they lend to. So in the coming weeks and months, they may think twice about loans to businesses or people that are seeking a mortgage, because their appetite for risk may wane slightly because of what's happened here.
OK, thank you for that, Jonathan. Jonathan Josephs, our business reporter. Let's discuss this story.